welcome back. You're still tuned into Markets at Noon, and let's get in conversation with the management of Cognizant. And we are being joined by Mr. Jatin Dalal, who is the Chief Financial Officer of the company. Mr. Dalal, hi, afternoon. Good to be speaking with you. And firstly, help us understand what's driving the confidence behind FY26 revenue. What's the growth range, and which verticals or geographies are showing the strongest recovery?
Yeah, absolutely. As you know, we delivered 2025 at the beyond the upper end of the guidance range. Beginning of 25, we had guided for 3.5 to 6. Eventually, we ended the year at 6.4% year on year in constant currency. As we look at 2026, we are guiding 4 to 6.5%, which includes 150 basis points of inorganic, and of which 100 is done and 50 is to go. We see continued momentum. We see continued momentum in BFSI, which, as you can see in Q4, grew 9% year on year, and that has been the strongest growth in BFSI segment for a few years now. We grew well during the course of 2025 in health. We grew 6%. We continue to see a good momentum on organic basis in products and resources. So these are the segments which are giving us confidence as we enter 2026. We also ended 2025 with 28 large deals, and the TCV of those large deals were in excess of 50% in terms of growth vis-a-vis where we were in 2024. So we are also carrying in 2026 a strong backlog of large deal wins. So these are the few data points that support our guidance for 2026.
All right, we do take a note of that. But Mr. Dalal, are discretionary budgets stabilizing or they're still under pressure? Give us some sense there.
It is a little bit sectoral. Definitely, we see strong recovery of discretionary in BFSI, and that is the reason you are seeing a very good growth, 7% for 2025 and 9% as an exit growth for Q4. We also see some amount of spend which is happening in health, which is visible. I wouldn't call it exactly discretionary, but the spend is happening. We also see certain segments of retail and consumer products beginning to spend a little bit more, and technology sector continues to remain quite good with their investments around the entire AI ecosystem. So these are the segments where we see discretionary well. The purses are still tied around communications, which continues to focus on cost consolidation exercises. Manufacturing still is in the zone of uncertainty given the changes in tariff and so on and so forth. So I would say it's sectoral flavor to the discretionary spend.
Right, Mr. Dalal, hi, this is Ankita also joining in. Good afternoon. Talk to us about the AI-driven productivity gains. Are they beginning to materially support the margins? And secondly, since you spoke about AI, how is AI changing deal sizes, pricing models, and even delivery costs?
Sure. I think AI is now a front and center of every conversation that we have. There are three swim lanes on AI. The first is really the traditional work getting done far more efficiently, and therefore significantly higher productivity benefits. We spoke about it. The second swim lane, which is an important swim lane and which is a growth swim lane, is making enterprises ready for AI. For example, like how do you navigate your today's data structures which were built 10 years back? With the AI, the data is encrypted. You have done micro segmentation to your network, so you can't freely make information available for any agentic framework to work. So second swim lane is just making the organization ready for a scaled application of AI, and the third is really applying or really deploying agentic frameworks for organizations and deploying agentic framework for organization is a big opportunity for IT services industry. Looking at a problem, making sure you create a historical data structure around it, training material for your agents, and so on and so forth. So these are the three swim lanes around which we are all navigating next few years.
Mr. Dalal, also, are the clients increasing net spending because of AI, or is it the focus largely on productivity-related benefits?
Right now, I would say the focus is far greater on the productivity-led benefits. But if we all believe, and you've seen recent results, Meta, Microsoft, yesterday, Google, they're all investing very, very heavily on AI infrastructure. Most of them are doubling their AI infrastructure spend between 2025 and 2026. And these are gigantic numbers. These are like 150 billion, 200 billion kind of numbers by individual companies. Now, all of that has to result in an ROI for Fortune 2000 companies. It has to deploy AI just beyond the efficiency gains. So we are very optimistic that AI will become a growth driver for the industry in times to come.
Right. Also, tell us what types of acquisitions are most strategic in this AI era?
So right now we are looking at the whole spectrum. For example, the 3Cloud acquisition plays on the Azure stack, which is very key as an enabler for AI deployment. You would have seen that Microsoft cloud business grew 39% in December quarter. So that's the sort of segment growth that Azure is supporting. So 3Cloud was in that space. So we will continue to look at the direct AI companies, but also critically in the second swim lane, which is making enterprise ready for AI. That itself is a big opportunity. So we will continue to look at in both spaces around AI ecosystem, the acquisition targets that we go out for.
All right, point taken, Mr. Dalal. Thank you so much for taking your time out and joining us on ET Now. With that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back.